All right, welcome back. Here's how the market wrapped up for Monday, November 24th, 2025. The S&P 500 finished up 1% to close at 6,637, and the Nasdaq gained 0.88%. It was a steady green day to start Thanksgiving week, even though the volume was light. People were clearly already in holiday mode, but the price action looked strong overall. Sentiment underneath is still cautious. Money is still flowing into long bonds. The 30-year yield slipped again to around 4.59%, and over in crypto, Bitcoin is still sitting near 86,000 after that sharp drop last week, still waiting on new momentum. Now, looking at the big picture, I am still long the QQQ at about 27.8 times forward earnings with growth above 20%. It still feels fine to me. Not stretched, the major tech names keep delivering, and the earnings backdrop is healthy. I am also keeping a large position in TMF, the long bond ETF, because I still think yields are way too high. The inflation trend is softening, and with more cuts expected in 2026, the long end should keep moving down. So I want to stay positioned for that move. All right, now let's get into what I actually bought today. 3 names that I really like heading into the end of the year, starting with MGM Resorts. It closed at $42.10, and this company is just crushing it on capital returns. They have already retired about 9% of their shares this year. If you do a quick sum of the parts, the Las Vegas Strip business makes about $2.1 billion in EBITDA, and at a 6 times multiple, that is $12.6 billion. The regional casinos make about $900 million, and at 5 times, that is $4.5 billion. MGM China worth roughly $4.4 billion, and BetMGM, the digital joint venture, adds about $1.5 billion. Put that all together, you get around $23 billion in asset value. Subtract $4 billion in net debt, and you have $19 billion. Equity value spread across about $270 million. Shares, that works out close to $70 per share of fair value. The stock is 42 right now, so I am buying every dip. The balance sheet looks great, Vegas is strong, and the digital side is just getting started. Next up is Occidental Petroleum, ticker OXY. It finished around $47.80 market cap, near $41 billion. They still have around 4,000 undeveloped high-quality wells in the Permian, each one producing about 6 to 650 barrels per day at the start. That inventory alone could easily be worth more than the current market cap, which means you are getting over 1 million barrels per day of active production, plus the carbon capture projects basically for free. And the third stock is StubHub, ticker STUB, dropped quite a lot from IPO highs because of fear that the UK might ban secondary ticket sales, but the UK is only about 10 to 13% of their revenue, so the panic looks way overdone. StubHub has incredible margins, 81% gross margins. They take a cut from every sale and hold no inventory. Revenue is growing 30 to 40% a year, yet the stock trades under 1 times forward sales. That is way too cheap for a platform business with this kind of scale. I am adding shares anywhere under 1750 and letting it ride. So overall, I am still bullish. The indexes are strong bonds, keep calming down, and opportunities like these are popping up everywhere. Now, I want to hear from you. Drop a comment below with MGMOXY or STUB, depending on which one you are buying right now, or tell me what else you are picking up into Thanksgiving. I read every comment. If you found this recap useful, make sure to like and subscribe. It really helps, and it'll be back tomorrow right after the bell. See you then.